The Federal Reserve, Fed, had its January Federal Open Market Committee, FOMC, meeting on Wednesday and the crypto market tumbled afterward. The Fed's move, although hawkish, wasn't a complete surprise. As the Fed promises to modulate interest rates in order to achieve its goals of raising employment and getting price stability, investors responded with fear. Bond yields are climbing above pre-pandemic levels, thus affecting the traditional and crypto markets. Investors fear the Fed's focus on getting inflation under control because the market's reaction is not a priority amongst the entity's task. If the Fed moves on to more hawkish reports, markets are likely to keep reacting in a downward motion. The central bank had already reported that with inflation well above 2% and a strong labor market, the committee expects it will soon be appropriate to raise the target range for the federal funds rate. Now, the Fed announced interest rates will remain unchanged. However, a quarter-point rate hike is expected to happen in March, which would be the first rate hike since 2018. Afterward, they will start shrinking the balance sheet, which has swelled to nearly $9 trillion in response to bond holdings. The FOMC released a statement that explained, the committee expects that reducing the size of the Federal Reserve's balance sheet will commence after the process of increasing the target range for the federal funds rate has begun. The economy no longer needs sustained high levels of monetary policy. There's a substantial amount of shrinkage in the balance sheet to be done. That's going to take some time. We want that process to be orderly and predictable. Chris Zaccarelli, Chief Investment Officer for Independent Advisor Alliance, told Bloomberg that Chairman Powell has to walk a tightrope. He needs to communicate that the Fed is 100% committed to bringing inflation back down to 2%, while not cow. However, that short-term forecast still paints a bad picture. Related reading: Bitcoin rush, small-time solo miners strike gold with full BTC blocks.